Banking in India. What are banks? Banks are the institutional bodies that accept deposits, grant credit to the entities, maintain the economic status of a country. Banks are kept under strict regulation in most of the countries. In India, the Reserve Bank of India (RBI) is the apex banking institution that regulates the monetary policy in the country. Evolution of Indian banking. Evolutionary phase prior to 1947. Foundation phase 1947 to 1969. Expansion phase 1969 to 1990. Consolidation and liberalization phase 1919 to till now. The Central Bank of India. RBI is the apex bank in a country. It controls, guides, and regulates the entire banking system and structure in the country. RBI is owned by the government and help in deciding the monetary and credit policies in the best interest of the country. Let's look at the classification of banks in India. Commercial banks, small finance banks, payments banks, cooperative banks. Let's understand the role of commercial banks. Commercial banks are profit-making bank regulated under the Banking Regulation Act 1949. The main function of commercial bank is to accept deposits and grant loans to the general public, corporate and government. Commercial banks can be divided into public sector banks, private sector banks, foreign banks, regional rural banks. Recent development in the Indian banking sector. In the recent year, the banking industry has undergone rapid changes. Telecommunication and information technology are the most significant areas which have changed rapidly. Some recent developments are digitization, mobile banking, unified payment interface, UPI, digital only banks. Thank you.